to Super Trades. Today we'll be taking a look at Bharat Electronics. It is one of the 16 PSUs under the Ministry of Defense, established in 1954 as a public sector undertaking, which specializes in the production of electronics, communication, and defense equipment. So let's first look at the fundamentals of the company. It has a market cap of around 1 lakh crore with the stock PE currently at 32, return on capital employed 29.9, that is around 30%, and an impressive return on equity of 22.8%. Now the median PE, if we look at the maximum for a maximum period, is around 18. So it is trading above its PE, but PE will be adjusted. Why? We'll look at it in a while. Now its peer groups are, Honeywell Auto, Data Pattern, and DCX Systems, which we will look at in some other video. If we look at the quarterly sales is very consistent and on an increasing trend. Its operating profit margin has been consistently increasing, and in the last 2 quarters it has given a decent more than average operating profit returns of 21, 28, and 19%. Its sales year on year, as we can see, it is increasing and it is poised to increase even further. In a while, we'll look at the order books and then we'll perform the technical analysis. The net profit, as we see, is also consistently increasing, and the operating profit margin has also been seen on an increasing trend. If we look at the capital work in progress, when we look at the order book, we'll realize that this capital work in progress is going to increase further, and its borrowings is almost negligible compared to its net profit. Of course, it is a cash generating company, and if we look at the shareholding pattern, of course the government is holding a significant chunk of the promoter's share, so it is consistent at 51.14%. But one thing we'll find here is that usually in many of the stocks which become popular, public is holding a quite a big percentage. But here public holding is not even one, you can say third of what the DIIs and FIIs are holding. So they are showing great interest in this particular company. Now, when we look at the earnings here, a very kind of unusual thing you'll find here, because this gray plot shows the estimated earning, what was estimated by the analyst, and the blue one shows the actual earning. In many of the companies that we analyze, we'll see that many a times it is either the case wherein the estimated earnings were more than the actual. It means the actual performance was little lower than the estimated or at par. But here in most of the cases you will find, barring a few instances, that actual earning is way higher than what the analyst had expected, right? And the expectation for 2023, 24, 25 is way higher. So if the company goes on, we are talking about the earning per share here, and if you look at the revenue growth here as well, you see the expectation and the actual performance, which is shown by the blue bar, and the gray bar is the actual is the estimated revenue. The actual performance has been way, it is either at par or greater than what was estimated. And we can see here in 2022 the estimated was 177 billion USD, and here now it is 176. So little, you can say at par here, but you see estimation for 2023-24 is way higher, way higher than what was the earning here. Now why is this particular case? To understand why the analysts have expected a very high annual earning here, we have to look at the order book of the company. Now according to the Bloomberg report, we can see that the Bharat Electronics has an order book which has reached almost 30% of its full year guidance for the fiscal year 2024 after its one contract worth 5,900 crore, out of which 3,914 crores of the order came from Bharat Dynamics in relation to their Akash Prime project, Akash missiles here. It includes ground support, equipment surveillance and tracking, as well as seekers for the missiles. The remaining 1984 crore of the order book comes from small orders like ground-based link system, communication system, PSO, electronics warfare system. The company has also 4,500 crore of order of electronic fuses from Army and 5,000 crore order of sensors equipment from shipyards and pipeline. And in terms of revenue division between domestic and exports company, the the company is targeting exports of 90 million USD in the fiscal 2024 compared to 48 million which was in 2023. The company's order book includes 60,690 crore ending fiscal 2023 and 5,900 crores so far in this particular fiscal. You can see here it's also that said that Bharat Electronics has also been working with Delhi Metro Rail Corporation on various projects, substituting inputed solutions, driving circulate simulators, computer-based control system, and others. It's also working in sectors of unmanned systems, cybersecurity, software, and energy storage. Outlook for US defense cooperation. The company would be benefit from product opportunities that might develop due to India-US defense cooperation. The firm would be in bet in electronics for US-based companies that might come to India for defense manufacturing in future. Bharat Electronics works with major players involved in joint venture with GE Healthcare for medical equipments and Boeing, which manufactures aircrafts, of course, for manufacturing sub-assemblies. Capex utilization. The company is spending 500 crore in capital expenditure this year for building both factories and enhancing current production and manufacturing equipment. Now remember here, now we look at a technical chart. If you see here, there is a decent support over this particular line. And if we draw a trend line from here, we can expect a breakout to happen anytime soon. Okay, so how we can trade in this or invest into this company? Either on the breakout and retest of this, we can enter here, or when the price comes down here and bounces up from here, we can take that trade. And if we look at the weekly, and in order to find out the retracement zone here, then from the current price we can expect a target, first swing target of around 22%, and at the golden Fibonacci retracement to the extent of 31% it can happen. I basically prefer to perform do SIPs in these particular stock because these are even good dividend paying stocks. So even if the price comes down, no worry, because this is a public sector undertaking, quite handsome dividend yield it has. So dividend will compensate for the fall in price. You can use your dividend to buy extra amount of equities in the same companies. This way you can multiply your growth. So as and when it breaks out, another strategy would be if it breaks out from this fib zone, you can take it, or when it bounces from this 126 level, right? So it's a decent company, it's a safe investment, but remember, do your own due diligence before you invest. This is only for educational purpose. I'll keep coming up with new potential stocks every now and then. So a small request from your end, please do like the video and subscribe to the channel. Thank you.